Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at how the USE minis unfolded yesterday, which was Monday the 6th. I think yesterday was a good example of what we call a hard day. For those of you who have been following these videos for a while would know that I talk about the cyclical nature of trading, where your trading results, not necessarily the market, but your trading results go in cycles. In other words, you have periods of profits where the trades are relatively easy and the analysis is easy, and you get good trades as a result. You then have periods when it's not quite so clear, in other words periods when the markets are quiet and your setups are quiet. Then you have periods of losing days, in other words when the losses come through. Every single trader will know that profits and losses do unfold, and in particularly losses do unfold. The trick is keeping the losses small. But what most people don't seem to appreciate is this tend to go in cycles. The MTPredictor automatic routines had some very good trade setups at the end or beginning of last week and the end of the week before. So as I've been explaining in our training webinars, we're just in that period when it's a hard time. So I thought it was good to show a video where the analysis was just a little bit more difficult, because not all trading is easy, and it's important to understand as professional traders there will be times when it is just that little bit more tricky. So let's have a look at the ES. This is on a 3-minute chart. For standard traders there was a buy setup there, but that was against a red STF. I'll have a look at that one in a minute. So the only setup would have been here, this DP sell. You can see we had a history triangle, then a DP sell, the bar afterwards. So why were the two of them? Well, this first setup here on the history triangle, if I place the analysis on, you can see that the bar actually opened, then it probably would have gone up and hit the stop trigger before actually entering the trade, in other words coming down to the entry level. So in other words, this trade setup would have been invalidated before the entry was actually initiated. If you had the trade module in our NinjaTrader add-ons, this one would have actually automatically done that for you. So what would have happened is you'd then have reset your trade on this second setup here, and you'd have been short from that level, and the market went down. It didn't quite reach your initial target, so you'd have been stopped out on the close for a small 1.5 hour profit, which was actually quite good considering the analysis not the analysis, the market was in quite a hard phase at the moment. If you look at the 15-minute chart, the 15-minute chart trend was not very clear at all going into yesterday, but we did have a TS1 sell as that DP on the 3-minute came in, so that would have given you extra confidence to be on the short side. So a small profit on the YM yesterday. There was some bit of advanced analysis going on the bottom here for you guys who are more experienced. If I put the crosshairs on, you can see that this bar here that went below the prior low, if I place a decision point level on here, you can see that it went down into DP support, was actually on a VSA buy bar, which was here. The next bar failed to follow through and carry on going lower, and actually the bar afterwards then gave us a blue buy bar, which if I placed the analysis on here, it would have given us a buy setup. The reason there was a history triangle there was because it was a double bottom. If you had been very aggressive with this, because of this VSA setup coming in here, you would have got a nice trade up into the first target for a 2.6 hour profit. Because you'd have been a bit more aggressive, as I always teach, once you get to the 100% initial risk level, bring your stop to break even. For you guys who are looking at the Elliott waves, this was actually, whoops, sorry I missed that, there was actually a 5-wave sequence coming down into this low here as well. But the only thing is this 5-wave sequence, it didn't start at a good level, so I wouldn't have given much weight to that. The main reason would have been that VSA bar coming in on that particular bar there. So the ES, a small profit from our DP sell, and maybe another small profit from this DP buy down here if you'd been more aggressive as a more experienced MTPredictor user. Let's have a look at the YM. The YM would have had a standard and automatic trade set up here. We looked at this in our trading room, and this would have been a -1 hour loss. Losing trades can and do happen. It's important to understand they do, as any professional trader understands that. There was then a setup later in the day. This was a sell setup, just as we looked at in the ES. This first history triangle would have not been triggered because the next bar opened and went higher, in other words invalidated the trade setup before going down and filling it. So this first trade setup was invalidated, therefore your orders would have been cancelled, and you would have actually come in on a trade setup on this second TS4 sell here. Market went just below the 100% initial risk level, so that would have been a just about a +1R profit. So that would have wiped out the -1R loss earlier in the day, and for the standard trade setups would have put you break even overall or basically scratch for the day, which is obviously quite nice on a day when you nothing much is happening. If you look at the 15-minute chart, again, very difficult to get any support and resistance levels, so the pattern at the moment is unclear, as I've been talking about in our training webinars. Lastly, let's have a look at the NQ. Here's the NQ. For standard trade setups, the only ones were here on our history triangles. Now this was slightly different, because if we place our analysis on the first history triangle, you can see that it didn't go up and take the first one out, so you would have actually come in and entered at this level. There was a double top there, so you wouldn't have been filled on your level stop trigger there. The market came down and you would have probably held it into the close for a nice 2.3R profit. If you look at the 15-minute chart, let's have a look at why you'd have held it into the close. If you look at the 15-minute chart, we had a TS4 sell at the high of the day. That indicated the large degree trend was down, therefore you're looking for sell setups. This TS1 sell here also gave you added confirmation the trend was down. That's why I was suggesting on the 3-minute chart that you'd want to hold it on the short side into the close, which was there, rather than looking to reverse at this TS4 buy setup, which was right near the end of the day anyway. So that was the NQ. So while we're here, well, let's have a quick look at the Russell Index. I don't cover the Russell Index that often, but if we look at the Russell Index, standard trade setups, you would have had a TS4 sell here. That would have got you to break even. There was another one earlier on just before that would have actually been stopped out for a -1R loss. You'd have been -1R on that particular attempt there. We then had exactly the same thing here. We had a history triangle. This time the history triangle would have filled, or I should say rather would not have gone to the stop trigger before before filling you, so you'd have actually been short off the first level. The market went down into our first target where plus 4.1R profit was available. Even if you'd made as -1R on the first trade, break even on the second trade, or even if you'd had a -1R loss on your second trade, so of these two you'd be -2R, plus 4R makes you into profit at the end of the day. That's why this position sizing is so good, because the profits are much larger than the losses. Let's have a look at the large degree chart to see the trend, and here's the trend here off that TS4 sell setup, indicating the large degree trend was down, and we actually had another attempt at that down there. So on the Russell Index, a good example of, even if you had two losing trades there at -1 and -1, in other words -2R loss, the last trade of the day coming down here would have actually put you into profit at plus 4.1R, less the 2R loss earlier would be plus 2R profit overall for the day. So a reasonable day for the Russell Index. But as I started, or as I suggested right at the beginning of this video, it was actually quite a tricky day yesterday, and as you can see, you'd have actually probably come out of the day break even, or would probably just a small profit. And there are days like this. You don't expect to make big money every single day. Professional trading and successful trading is about treading water during the quiet times and basically keeping your trading capital intact, which means either doing no trades or small profits and small losses, getting yourself ready for when the good times come around, when you make the big profits. So I thought this was a good video to do, because it showed you some smaller trades using the MTPredictor software program on a day that was actually part of a harder part of a cycle. So just to show you the good, the bad and the ugly of trading, so to speak. Or in other words, how your profits and losses unfold in the real world.